The next situation says that the company rented space in the building to a client. We're charging them $1,000 per month, and this relationship began on November the 1st. The rent was paid in November. However, they didn't pay their rent for December. So we've talked to them, and it says the tenant has agreed they're going to pay both the December and the January rent by January 15th of the next year. So, they've been there a couple months. First month they paid, second month they didn't. We negotiated with them. We want to hopefully maintain this relationship and keep them one of our tenants. So we're going to give them an extra chance to let them pay 2 months next year. But that means I'm going to have to record an adjustment in this year. Now, in this case, I have rent here that I haven't received yet. They owe me this rent. So what I'm going to do is credit an account called Rent Receivable. And then on the credit side, I'm going to do Rent Earned. So I'm going to debit Rent Receivable, and I'm going to credit Rent Earned. Now, Rent Receivable, you've probably never seen that account before. That is a asset, just like accounts receivable. And then Rent Earned, obviously, that's revenue. We've earned the rent. They've occupied the space. We just don't have the money. So in this case, we have to record the amount. Now, how much are we charging them per month? It's $1,000 per month. So we will record this for $1,000. So basically, I've earned that $1,000. I just don't have it yet. And again, notice that they're going to pay us for both months in the following year. So again, that's going to be one of those that will require a subsequent journal entry down the road. And then this situation, on November 1st, we rented space to another tenant. This one is being charged $1,500 a month. And what did they do? They went ahead and paid for 5 months in advance. So we've got two tenants, and they're almost opposites of each other. We got one tenant who's behind on the rent. We got another tenant who's paying us ahead of time. So this is going to require an adjustment because we will have earned some of this rent, which we previously hadn't. So this will be on 12/31. Now in this case, I want to debit unearned rent and credit rent earned. Now, why do I record it in that manner? Well, remember, according to the revenue recognition principle, I'm not allowed to recognize rent until I've earned it. So back when they paid me in advance, what they would have done in the past is they would have credited the liability unearned rent. But now that time has passed, I have earned it. So the unearned rent now becomes rent earned. The question is, how much? Well, $1,500 a month. This began on November 1st. It's now the end of December, so I have earned 2 months worth of that money. So $1,500 a month, 2 months worth, $3,000. So that takes care of at least part one. That takes care of all the adjustments. But now on part two, I've got a couple of items of unfinished business. They also want me to do any subsequent journal entries that would be required in the following year. And these are probably going to be the toughest journal entries of all to record. I've got 2 of them. The first one, I've got to do one on January the 6th of 2014. Why? Because remember back here on this payroll, this salary situation, remember that was one that I had to go back and deal with. Says they're not going to get their next payday until Monday, January the 6th. So on Monday, January the 6th, I've got to do a journal entry for that. Now in this case, I definitely want to debit salaries expense because I'm going to have a certain amount of more salaries expense. But at the same time, I'm going to be able to get rid of my old liability, my salaries payable. And I'm going to pay for all this with cash. So I have to debit salaries expense. I've got to debit salaries payable. I've got to credit cash. Now it told me in that problem, all 10 employees together make $2,500 every day. We pay them for a 5-day week. So $2,500 a day. If I'm going to pay them for 5 days total, that's going to be $12,500 total cash. Now, I'm tempted to go up here to salaries expense and put $12,500. That would be wrong. I don't want to do that. Why not? Go back up here and look at this. We've already booked $5,000 of that salaries expense. And we had a $5,000 salaries payable. I've got to get rid of that. So I've got to debit $5,000 to that salaries payable. So the difference that's left over is $7,500. So that'd be the proper way to record that entry. Now I know that that's a little confusing. In fact, that's probably the toughest of all the journal entries in this particular problem. But think about it this way. Even though I didn't pay the $12,500 until January the 6th, of that amount, $5,000 of that should show up last year as an expense because that's 2 days that they worked last year. The other 3 days show up on here as an expense, and the credit and subsequent debit to salaries payable just cancel each other out. So basically that's what I'm saying is they worked 2 days here, they worked 3 days here, but we didn't pay them until this point. So sometimes when those dates don't match up exactly right, we have to do little things like that to account for that. And that's a little confusing at first, but the more you work with accruals, the more you'll begin to see why we have to do that. And then we have one more entry, and this is also a subsequent journal entry. The other situation that we had was the rent situation, where this person was going to pay us finally for 2 months' rent on January the 15th. So on January the 15th of the following year, we're finally going to get this rent paid to us. So what they're supposed to do is pay us cash, so I can debit cash. Now they're going to pay us how much for 2 months? And it's $1,000 a month. So I'm going to debit cash $2,000. But on the credit side, I'm actually going to have 2 credits, because half of that is for one thing, half of it's for something else. So of that $2,000, $1,000 of that is rent that I have earned in the month of January. But the other $1,000 of that is the settling of my rent receivable. So I've got a debit cash $2,000, credit rent receivable $1,000, credit rent earned $1,000. And again, whenever you do these kind of entries, I know they're a little confusing, but think about it like this. They occupied the building in December. We earned $1,000. We hadn't got it yet. Now we finally got the money, but we got double the money. And half of it was for what they owed us from last time, and half of it is what we earned in January. So again, even though I got the money on the 15th, I earned half of it in December. I earned the other half of it in January. So that completes this particular problem on the adjusting journal entries. And like I said, at the end of every accounting period, you have to go through this process and do these adjustments for all these items, because these things need to be corrected before we can move forward to the next accounting period.